does more debt reduce the value of depreciation? And the answer to that is no. The less equity you put in a deal, and the bigger let's just say for example here, the bonus depreciation is 20% of the purchase price. Okay. If you used a bank debt for 80 and you only put 20% cash in, that makes the depreciation very valuable. That means your bonus depreciation is going to be about the same. If you did an all cash deal, which we did, we closed on an all cash deal yesterday in Illinois. We bought a $1.2 million property for all cash. That actually reduces the value of bonus depreciation because there's so many more equity partners that are sharing in that bonus. Because the bank doesn't take bonus. The bank doesn't have a tax basis in a property. So the more bank debt you use, the juicier your returns can be. But as we know, highly levered real estate is risky real estate. So it doesn't, just from a sponsor side, it doesn't make sense to take a lot of debt right now in this market. Debt's very expensive. So we're doing low leverage. And of course, there's lower tax advantages and lower IRR and lower upside, but we're reducing downside risk by going low leverage. So there's trade-offs in everything in real estate. As a real estate investor, I'm looking at risk-adjusted returns. And my cash is going into a deal. I'm thinking, hey, what are the odds I lose all this cash? How can I protect against that? And then the secondary is, hey, what's my bonus depreciation? What's my equity multiple? What are my cash on cash yields? So it's a little bit more complex of an answer, but I hope that helps.
We talk about recapture, just like, oh, well, when the recapture hits, you just pay the tax. But if you go break a deal and you took all that bonus depreciation and you get recapture at the other end and no cash comes back, well, guess what? Like, you don't want to be there. So yeah, like that's a bad deal.
You're talking about selling a deal at fire sale for, what your current basis is. You'll still have a taxable amount if you bonus the hell out of it. Yeah. And you're going to have to A, lose your equity, B, lose your property, C, have a tax bill. That's not ideal.
We're talking about the 1 million you bought that you depreciated 250 that you sell for 1.5. Well, what if you sell it for $500,000? There's still some recapture in there. And, when you get into sponsor deals, like you just don't even want to go there. So don't do bad deals, people.